All right, let's get it on. So today we're going to talk about some GDP stuff, and we're going to talk about a couple articles that I found this morning. One of them is on the tariffs, the 25% tariffs on automobiles that are imported into the U.S. Nice little article there. I think kind of shows the point of these tariffs, and regardless of what you think of them or who do you think the tariffs affect and whatever? Because I know there's lots of big debate out there about, who actually pays for the tariffs, whether it's the country that is sending the product to the US or does that price get passed on to the consumer? At the end of the day, it really doesn't matter. And we'll talk about why. Um, so that argument there is kind of moot. And this article is actually a good article as to why it really doesn't make any difference. The effects of the tariffs it still end up doing what they're meant to do, and that's to bring manufacturing and jobs um, and growth into this country. So we'll find a nice article about that. We'll talk about that in a little bit. We're also going to talk about what we see going on here. Market's already starting to sell off again. As you can see, we opened up a little lower than we closed. We actually did continue to move in the downward direction yesterday. I was kind of more or less expecting it to consolidate um, around this what would have been support here, but we actually did continue to get a couple more sell-offs later in the day. We closed. We opened up a little lower than where we closed yesterday, so still pretty bearish as we're going along here. Did make a little bit of recovery, but you can see here that we're just kind of slowly tipping back over. And before New York session even opens here, we've already made our way back down to lows or just about lows of the day. So, um, daily bias, I mean, you can kind of clearly see that we're looking at a bearish bias again, right? Pardon me while I drink my caffeine. Um, so yeah, we'll be looking for shorts today to go along with our daily bias. I think that is the appropriate choice there. We got about 2 minutes here, a minute before market opens. And it does look like we want to continue to sell off. I mean, it looks like we're heading right back down to that 19.5 support that we've been messing around with. We did get rejected by the 200-day moving average on the day chart, as you can see here. We pushed past that a little while back. We came down. We had our little retracement, which is basically all this was so far. And now we have again some more news and negativity. So we've run up to the 200-day moving average here that you can see is starting to curl over, and basically got a pretty big rejection off of that 200-day moving average yesterday. So I would say that we continue moving to the downside. We have a little gap here that we probably want to fill, and I think we have some more room to the downside, probably coming back down to this 19.5 range that we were at for about 2 weeks, actually, um, not too long ago. So, New York session open. Here we go. Let's see what we get here. So we basically moved right down to lows of the day from previous session here. Took a little bounce. Let's see how strong this bounce is. I mean, this all looks pretty bearish overall. Yeah, got a gap here or imbalance here on the 4-hour chart. But this looks pretty bearish. I think once we break the lows here of the day, we continue moving to the downside. I think that's going to be the once we break these lows here, I think we have some more sell off. But let's see. That's just my opinion. That's the way I'm reading it. It might be coming pretty soon here. Big bearish candle. Yeah, so I think we're gonna run here now that we broke lows of the day. Question now is will we be able to get an entry here and catch this run? And I think we head right back down to that 19.5. So, like I said, now the question here is can we just get an entry? Pretty much red across the board on the heat map. See if we can kind of come back up in this imbalance area. It may not give it to us. Hmm. All right. So we pretty much have confirmation on the daily bias. Now we're just looking for a proper entry. Sometimes we just don't get one as it's building momentum in one direction. So we have a tiny area of imbalance here, but that's kind of small to use. But we have momentum. Yep, large, big first 15-minute candle here, just like yesterday. We'll give the price some room here to pull back a little bit. All right, nice move back up here. A little imbalance here. So we're going to use this to continue to go short here. We're going to wait for this candle to close here just to see where we end up. Not quite what we want to see here. So we're going to wait it out a little bit longer. Okay. Maybe price doesn't want to keep going down. Perfect example of why we wait for candles to close. Even though this looked pretty bearish here, it actually closed bullish, right? Followed by a very bullish candle afterwards. So we are filling now this area of imbalance that we had left behind first thing this morning that I had marked out before, right? And again, a disrespect there. See what we look like on the 15. Okay, so we pushed down. Wasn't the greatest close. And then we're basically pushing right back and taking everything we lost here. We actually, if I'm looking at this properly, have a 15. Oh, no, we don't. No, we don't. Just kidding. Not with that wick, we don't. Nope. So we don't have anything left behind here that price could be looking for other than retesting the previous lows. So we do have another bullish imbalance here. This might be our turning point here. We filled our balance we left behind first thing in the morning. We peaked out, but we didn't close outside. This looks very similar to yesterday's setup. We're going to try a short here. Oh my goodness. Oh my, and that just took me out. Wow. That just killed the account. I had my stop loss set at 1500. Look where it filled me, 3300. That just blew the account. It's another one. Wicked candle went right past the stop loss and filled twice the amount of what I had it set for. And that's it. Caught here live. That's the market. That's the market. You don't know when you're going to get these wicked movements. I mean, that was a split second move there that just, yeah, that's it. Another account down. Operation Rescue account failed. Jesus. Well, let's see where this ends up going. Hang out for a few more minutes here. I've only been live for 30 minutes. A similar setup to yesterday, where we had our initial push down. We came back up into the original imbalance area where we peaked out, but we ultimately closed bearish and then we continued to sell off. So a very similar setup to yesterday that I didn't take. Um, so this time, you know, took the opportunity, set my stop loss above the wicks, and this candle just skyrocketed. Stop loss was set for 1500, 1.5%. It took me out at 3.3%. That's where the order filled, which ultimately um, exceeds my max drawdown for this account. So this account now is blown. Yep. And watch this ultimately continue to go to the downside because that's what happens. You know, that's just the market. You can't, there's no way to call that. There's no way to, honestly, I don't even know if there was, I mean, this was a good setup based on the strategy. Daily bias, I'd say, is bearish. I mean, even still, we came down and filled this gap from over the weekend. This was Friday to Monday. We have this gap here, filled it. Well, we'll see what happens the rest of the day. I still feel like this is a pretty bearish day, although the 15-minute chart doesn't look like that, right? Man, oh man. So even if you set orders and stop losses and whatever, depending on how quick these candles move, it doesn't matter. Makes no difference. So let's see here. I got in right about here. My stop loss was here. We would have been targeting previous lows. I mean, that's a nice setup there, right? Oops. It's going to be real quick and short recap today. Hmm. What are you going to do? It's almost a 3-to-1 trade here. Hmm. Well, let's at least talk about the numbers that we had today. We didn't get there yet because I was paying attention to price action here. We had GDP numbers come out this morning. The big hitter GDP growth rate quarter over quarter, and these are the final numbers, came in slightly better than expected. We were looking for 2.3%. We got 2.4%, a little bit better than expected. On the other hand, the GDP price index, a little bit less than expected. We were looking for 2.4%. We got 2.3%. GDP sales quarter over quarter came in a little bit better than expected. We got our initial jobless claims and continuing jobless claims that we normally get every Thursday. Those were pretty much break even as they've been for, I mean, a while now at this point. Those numbers really haven't been changing. They've been coming in basically around expectations for quite some time now. Um, Real consumer spending came down a little bit. We were looking for 4.2%. We got 4%. Could be a little, indication of, people are getting worried. That aligns with the consumer sentiment that we had a couple weeks ago, where that was really low. Also, um, tomorrow we have PCE prices. which is important, right? Um, so we have core PCE and then regular PCE, and we also have our final Michigan consumer sentiment um, and expectations come out tomorrow. So kind of a decent amount of big hitters tomorrow. We also have personal income and personal spending tomorrow. So we got three kind of big hitters for the market tomorrow. So we'll see what we get with that. Um, I will most likely not be trading tomorrow because now I have to get another account here. And honestly, I think I might take the weekend to go back and try to figure out what's going on with me and my trading here. But I'll try to come on live quick anyway, just to see how the market is moving, see how the market's reacting to these data points tomorrow, and then we'll go from there. So tomorrow will be a short one that I won't be trading in, um, unless maybe I'll do some paper trading, but we'll see. We'll see. Paper trading is good for when you're a beginner. Once you reach a certain point, it's kind of it's kind of difficult to go back to paper trading because you're losing the emotional aspect in the paper trading, and that's the part that that people struggle with, right? So after you learn the basics and and how trading works and how to place a trade and this and that and kind of get comfortable with certain strategies, you move into trading with real money, and then most people have a shock because it's nothing like paper trading, and that's because in paper trading you don't have the emotional aspect to it. Um, so going back to it doesn't really do you any good. You kind of just have to pay your dues in the live markets, which I have definitely been doing. So yeah, well, I mean, it is what it is. What are you gonna do? Um, Another account down. This was crazy here. 1.5% stop loss, and it took me out at 3.3%. You guys can see here, full disclosure, this was the trade right here. My stop loss was set for 1500. The actual order filled at negative 3300, which ultimately exceeded my max drawdown. If it filled me at the 1500, I'd still be fine. But this candle that just skyrocketed out of nowhere um, filled that order way above where I had it set. It is what it is. That's the market. That is definitely something that you have to understand and know that that could happen. You can get some wild movements, and even if you have, you know, orders set, that doesn't guarantee that you're going to get those orders filled at the price that you have those orders set at. So it all depends on how the market moves. And there's no way you could know that that was going to happen. The volatility index isn't even high. We're still below 100. Um, that's just the market. It is what it is. Uh, can't really be mad at it. You just learn from it. You know, I still think that today's a bearish bias. Uh, I feel like we're still going to end up continuing to the downside. I think our next stop is right back down at that 19.5 zone. Which if you go back, let's just look at a larger time frame here. I still think we're coming down here. This is, price has been stuck down here for quite some time. We had a little bit of good news. We came back up. We retested the 200-day moving average here. We got rejected from that yesterday pretty cleanly, right? That's a pretty good rejection right there, taking up the prior 2 days worth, right? So I definitely think that the bias is still to the downside. I think we come back down to this 19.5 zone, if not today, tomorrow. Um, and then we go from there. So, I mean, ultimately, I followed my strategy, I followed my rules. I traded with the trend, or with the bias, I should say, and it just didn't work out. It didn't work out, and this particular trade just price moved way too fast and filled my order at the at twice the amount that it was set for. So it is what it is. It's a scam. No, it is what it is. You can't blame the markets. You can't blame anything about it. It just the markets do that. It happens more often than you'd like, honestly. So just got to be careful. You know, trying to be a day trader is risky. It's that's just the job. There's no if and buts or ways around it. Everything you do in the market is risky. It's just, how you mitigate that risk. But no matter what, it's a risk. Some are less, some are more, but it's a risk, period. That's that's the job of being a day trader is how you mitigate your risk. And I thought I was doing a pretty good job here until this candle just, you know, um, strapped a rocket to its bottom and ended up in the moon. So it is what it is. I want to stay just a couple more minutes here. I can't do anything, but I just want to see price fall. Just because, at least then it'll give me some confirmation that my bias was correct. Whether my trade was or not is, different story and up for debate, but I want to just see if the bias is correct. And we could honestly just be um, sideways trading today. That's kind of what it looks like it's forming. Is this structure again where we just trade in a sideways range. So let's see. Wait out for a couple more minutes here. Let's see what happens here, um, and that's it. Nothing we can do about it. Nothing we can do about it other than learn from it and try to do better next time. That's it. There's no point in, getting frustrated over it. There's no point in getting mad. Um, that's not going to do anything for you if you want to be successful. That's just going to hold you back, honestly. So take the loss, try to learn what you can from it, and try to do better next time. That's all we could do. That is all we could do. I did want to talk about real quick this article that I found. Um, Aston Martin stock hits fresh record low after U.S. tariff imposition. There's a lot of discussion out there about who eats the tariffs, whether it goes to the consumer, whether it goes to the company itself, and there's a lot of I don't know, I guess evidence or talk um, that proves both ways, and ultimately the companies will try to um, raise their prices. Obviously, right? Businesses are there to make money. So if there are tariffs implemented on their products, yes, they will try to raise prices to eat up some of those tariffs. So yes, it will go to the consumer until the consumer decides they don't want to pay for it anymore. And so what you see here is the consumer right now across the world, really, it's not even just the US, um, is struggling. And we don't really have any more money to spend. So these companies can, if they want, increase their prices, but people are going to stop paying. Let me just bring this up here. people are going to stop paying because they can't afford to anymore. So you have companies like Aston Martin really is kind of a different range of people, but even they and their stockholders um, are already feeling the pain because there isn't much money to go around anymore at the consumer level. So these tariffs, what's going to happen is, some of the companies will try to implement these tariffs into the prices, but ultimately people are just going to stop paying for their products then. And then what do the companies do? Well, they have to either eat the tariff um, and take it in the margin, or they start making their products here, which is the whole idea. And you already seeing some other companies are already making deals to start building factories or start, making their parts or whatever here in the U.S. And that's the whole point. So I just wanted to point that out here because there's been a lot of stuff across social media, you know, about who pays for the tariffs and who ultimately suffers because of the tariffs and whatnot. If the economy was really, really good and everybody was doing well and we placed tariffs on a company, sure, they might increase, the price of their products a little bit to kind of subsidize those tariffs and people would pay for it. But the thing is right now, I don't think that there's any money left for people to pay anything extra for anything, especially things like an Aston Martin, right? But this is an extra thing. Okay. This is something you buy when you have money to buy it. Um, so that's I just wanted to point that out because that's important to understand too that yeah, companies will try to subsidize their tariffs with the prices or whatever as long as the consumer will pay for it. But once the consumer decides they don't want to pay for it anymore, guess who eats the tariffs? The companies do. And right now, we're at a place where the consumer isn't going to want to pay anything extra. So at this point, it's not the consumer that's going to suffer. It is going to be the companies. And you will start to see some of these companies, in my opinion, either wheel and deal or start making their products in the US. Um, I had a couple other things here I wanted to talk about, but meh. Ukrainian military says Russian forces building pressure in Sumy. This is like literally yesterday or the day before yesterday. Um, the the White House staff had stated that they were in talks. They were real close to having a ceasefire agreement. They made an agreement to allow for shipping, um, and now today we're getting this article where this top military official on Facebook posts this thing where they're seeing Russian forces increase in this Sumy region here, and it's like I feel like neither side want this war to end, and no matter what we do or the European countries, it's like neither one of these guys are going to accept what needs to be accepted to make a deal and stop this war. Um, which is crazy. There's some other things going on here that we can't see or whatever that this war like needs to continue. It's like stop already. But I just wanted to, I wanted to point that out too because I think it's super interesting that, one day we're basically ready to sign a ceasefire with both sides here and then the very next day Ukraine, which this is a lot of times it's Ukraine is the one saying, "Oh, well, Russia's doing this, so we're going to strike first." It's like, I don't know. I don't know. It almost feels like they don't want this war to end. because they're not in the position to be the ones making demands, to be honest. Um, but it just seems like every time we get close, you know, one of them decides to mess it all up, and then we're back to um, missiles flying and people dying. What? And the only reason why I bring this up is because it affects the markets. It affects the markets, and when you have one day you're saying this, the next day you're saying this, it's uncertainty. Same thing with the tariffs, where you know for this week we're talking about this amount of tariffs, and everybody's going to get the same tariff across the board, and then the following week we're like, maybe we'll change it a little bit, and then the next day we're like 25% on all vehicles outside. It just adds uncertainty into the market, and when you have uncertainty in the market, that's when you have um, crappy days in the market, sell-offs, volatility, all that stuff. So it's important to kind of understand some of what's going on around the world, just so you can have um, a little bit of understanding as to why the market's doing what it's doing, because it does affect it. It does affect it, especially like with oil and stuff. So it looks like we are starting to top out a little bit here. Um, this was a nice move here. I left this area of imbalance here on our wicked move that took me out and killed my account. Came back in it, filled it completely, moved back up, didn't make new highs, and now we might be getting some selling pressure here. But ultimately, if we don't continue to sell off today, I think we do trade in a range because we have a lot of stuff coming out tomorrow for data, and that's that. So I'm going to call it a day because I can't do anything else other than go back and figure out what the fuck is going on. um, but yeah, so that's going to be it for me today. You guys got to see it live right there. Boom. Account killer. This candle right here, account killer. Uh, and yeah, so I'll try to be back tomorrow. If I'm not, I'll at least update everybody on the Discord. So if you're not a part of the Discord, the link is in the description for the free Discord. I will update the Discord for sure as to those numbers tomorrow and then what's going on. And then I'm going to take the weekend and figure out some things. And then if I don't come on live tomorrow, we'll see you guys next week. So I appreciate every single one of you. Thank you guys for watching. I hope this helps. And if it doesn't help, at least it's entertaining. um, so if you haven't subscribed to the channel, please do that for me. Help help the channel out, help me grow, help me continue to bring content like this out and make it better and better as I go along. And then again, don't forget to join the free Discord. Link is in the description down below. Have a great day. Trade safe, and I'll see you guys all next time.